Hi guys, how are you? Welcome to Real Macroeconomics and Investing. Welcome to TradingView YouTube and my subs. How you guys doing? Welcome, welcome, welcome. Well, what did I tell you? Right? Everybody wanted to pick the bottom, pick the bottom, pick the bottom. And then they didn't like it so much, right? And that's this is why I made a video a while back somewhere. Don't try to pick bottoms. Okay, this is back on I don't even know what the date is, but January 21st. Okay? So I said don't try to pick bottoms. And this is January 21st, right? And look at this move. Okay? The next chart after that, uh, where is it? Where is it? Don't try to pick bottoms. Uh, where is the other one? Come on. Where is it says QQQ somewhere. See, I'm getting nervous. And it's right in front of me and I can't see it. I found it. Uh-huh. All right, so here it is. QQQ. All right. Crowd got what they wanted and don't like it. No, no, no. They don't like it suddenly. So they picked the bottom. So why did I say that back here? Because everybody's like, oh, the bottom is here, the bottom, the bottom, the bottom. Well, if enough people say it, you're going to get it, but it's not going to be the bottom, right? So they got it, and then suddenly they didn't like it. And that was the next, you know, point that I wanted to make is that look, came right back down. Don't try to pick bottoms, guys. This is not the time to be doing these things. You want to be making money when it's boring. Boring is good. Boring is going to make you a lot of money. Excitement is going to lose you a lot of money. I've said that before. Okay, and I think you guys are getting it. All right, so let's talk about what I've posted since, mostly videos. All right, we talked about home prices falling, new home prices. I emphasize new. Right, it's the new home prices that are falling. Okay, fair enough. Is that the holy grail of analysis? No, but it's something you should be aware of. Okay, just to answer a few questions. Tell me what the target price is on X, Y, and Z stock or whatever. I don't have one. My job is not to guess. Oh, so you don't know? No, I don't know. That's not a bad thing. That's actually factual. It's the people that know that are going to get you in trouble. Because if I tell you a target and it doesn't hit it, and you're thinking, well, Nick, he's more experienced, he said this, and I'll do that. No, that's don't try to guess. Um, by the end of the year, is it going to be higher or lower? I don't know. I don't have a crystal ball. Um, I You have to get away from that kind of mentality. You have to understand that this is a marathon. It's not a sprint. Investing is a marathon. Um, so if you're sitting here, I hear all the time, like, oh, there's support and resistance and support and resistance and support. Where's the support and resistance in here? It's going from the bottom left, top right. There's no support and resistance. And yet, every single day, billions of times over and over, support and resistance, support and resistance, support and resistance. I. It's not that. Again, I don't do that. It doesn't mean that other people that do that are not successful. Okay, if you ever hear me say anything about somebody else's analysis, it's not to put them down because I don't know how they do it. I didn't study the way they do it. Okay, it's just that I don't do it and I'm explaining why I don't do it because it doesn't contribute to my knowledge. Okay, as to how I do things, it's different. Okay. So don't take it that Nick is saying bad things about the people that say Fibonacci's and candlesticks and moving averages and I'm not. I don't know how to do it. It's my ignorance. It's not their fault. So yeah, so I don't use it as a result. So it doesn't mean a whole hell of a lot to me. Um, I can tell you that we're in a different market. Okay, it's a different market. We're not in this market anymore, right? So don't pick bottoms. What do people do? Try to pick bottoms. magic. It's unbelievable. You know, new home prices, like I said, they started to drop. Now, the fact that they dropped 10% in 2 weeks, I'm sorry, 2 months, is a big deal. Doesn't mean that it's the end of the world. It doesn't mean that something really bad is going to happen. I don't know, but again, I emphasize it's new home prices. It's not all home prices. But if we analyze this chart, you'll see back in the 2000s it wasn't a big deal. Okay, there was a correction in the great financial crisis. Okay, makes a perfect sense. But it took years for it to drop 20%. And we did it in 2 months. You should pay attention to that. And that's the key, as far as I can tell, um, to the way I do things. I don't guess. I don't guess. I set up risk rewards, okay, probabilities based on charts, based on macroeconomics, based on the trends of data points. Okay, that's what I do. Now, if it goes my way, great. If it doesn't go my way, okay, move on, next. Okay. But when you see new home prices starting to fall, you should pay attention to it, and start to weigh all the macroeconomic data that is available. There's so many moving parts, right? But you care about the ones that start sticking out like sore thumbs. And then you take those pieces of the puzzle and you start putting them together. So, people are like, well, I have a model, and my model shows that models don't work, as far as I'm concerned. Okay. At least for me, they don't. Again, always for me. They don't work. And that's why I call them incubator economists, right? They set up a box, they put a whole bunch of parameters in there. They say, okay, this is the way the economy works. And then it does this, and guess what? The incubator is right out the window, right? Uh, the whole model is worthless. Well, I back tested it. Well, that's great that you back tested it back to 1963. This is 2022. You cannot tell me that we have the same problems or good fortunes in 2022 as we did in 1963 or 1980 or 1992 or whatever. Okay. Well, the economy doesn't repeat itself, or the stock market doesn't repeat itself, but it rhymes. That's great, but I, useless information as far as I'm concerned. I can't go out and make money with that, right? That's great that it rhymes, but it's not the same economy. It's not the same animal. So when you're asking me, is it going to be higher? Is it going to be lower? What's my target? What's this? I don't know, and nobody else does. So you shouldn't be asking that question. So I need to, if you're going to listen to what I say, or follow my little diary here, and try to understand, because the question I got was, well, I like your analysis, I love it. I just don't understand it. Right? That's a great compliment, because what I'm telling you, you can understand. It makes sense to you, and it's really not that difficult. It's not. I'm not doing anything magical. Okay, with supply and demand, more buyers, more sellers or less sellers and more buyers or whatever. Right? It's not magical. You understand it. Good. How I got there, is the part you don't understand. But I'm not going to teach it to you in a 20-minute video and trading view. It takes a lot more effort. I don't have a model. I can't tell you, go read this book and that book, and this is the way the model works, and, good luck. I don't do it like that either, because I don't know what's going to be important. I can't tell you years ago, hey, we're going to have commodity inflation. Stocks are going to be at all time high. Labor force participation is going to be in the toilet, and you should worry about new home prices. There's no way anybody can know that stuff. It's impossible, and that's why I prefer dynamic analysis. Look at all the data points. Look at all the moving parts. See what sticks out like a sore thumb. Take that information from a macroeconomic standpoint. Take those data points, plug it into my, understanding of macroeconomics, how money flows. Okay, it's not difficult, right? Money. Um, think of government, the productive economy. Okay, then you have the household income. their savings equals profit. And savings, profit savings go into asset prices. Okay, asset prices. Okay, so um, people say, well, that money comes from government. No, government doesn't have anything. Okay, so it has to tax first or borrow, uh, so the government can spend it, right? And then it goes through the household income to savings into private savings. There's no way you can have profit without household to saving. It's not possible. It's mathematics, right? So what happens with profit? Well, if profit savings don't come back into the productive economy to make the economic pie bigger, well, it ends up in asset prices. As those dollars end up in asset price inflation because of the savings bubble, I call this the savings bubble. Okay, um, if there's so much savings, then it's got to go somewhere. These dollars have to go somewhere. Okay, fair enough. Well, where are they going to go? Well, there's stocks, bonds, commodities, real estate, and crypto. Okay, that's it. There's no other place you can put your money. I mean, you can put it internationally, you can whatever, but these are the basic asset classes. In the past, in the past, there was a limited amount of money, so you can't just own everything, right? So we didn't have an everything bubble. So there was a relationship between stocks and bonds, real estate and commodities, okay, um, and they would fluctuate and go up and down and whatever. Okay, fair enough. Today, with so much money out there all over the place, that money just pushed prices up in stocks, pushed money up in bonds, pushed up money into real estate, pushed money up in cryptos, except for who? Commodities. That's the only thing that really didn't move, right? In fact, as I show in, where is it? This is food inflation. It's okay. If you look at uh, food inflation, okay, it's been going down 13 years. And, food is part of commodities. And what's happened since? I said, look, major breakout. Question mark. Is that going to happen? Right here. Well, let's take a look. Boom. There you go. It is a major breakout. So what's going on here? Right? What is going on hither? Let me show you the commodities. Okay. This is back on April 28th, 2021. Everybody's telling you, inflation is transitory. Don't worry about inflation. Don't worry about it. Okay. Well, I'm telling you that right in here, it's a on the verge of a 13-year major breakout in commodities, right? It's a very simple chart. There's nothing special about this chart. 1, 2, 3 down, nice channel, 13 years breaking out. What happened? Boom, off to the moon it went. So, as I showed you before, you have stocks, bonds, commodities, and real estate, and everything is, to the moon except for commodities and cryptos. Okay, everything is up to the moon. And then here's little commodities. It's little because it's a very small market relative to the rest of the asset classes. And money starts to flow slowly into commodities. As commodities start to rise in price because they're cheap, okay, not only they're cheap, but relative to bonds, they're offering the same coupon, zero interest rate. So why not go buy commodities? Well, what happens when you buy commodities, right? The great equalizer. Well, you end up with inflation. All raw materials start to rise. And as a result, prices start to rise. So it has nothing to do with, transitory and supply chain. Not that these things should not be considered, but that's not the reason. And nobody's really going to tell you what the real reason is because they have political purposes. They're going to sell you some narrative, right? MMTers are never going to ever admit that, oh, yeah, excessive deficits are what's going to cause commodity inflation. They'll never tell you that. Politicians not going to tell you, hey, Trump was just handing out trillions of dollars to everybody and their mom, and that caused inflation. Biden is certainly not going to come out and be like, yeah, I want this Build Back Better plan and I want more trillions of dollars. Okay, so don't make this political. Right? Nobody's going to tell you that. You just got to look at the data. And that's why I say, look, charting is a lot more than just, trading, investing, Fibonacci's and MACD's and RSI's and blah, 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 all this stuff. It's great, but it's not going to tell you what the real story is. And this information is beyond trading and investing because you understand what's really going on in the economy, not what they're telling you is going on in the economy. So we ended up with inflation. Fair enough. Fair enough. So when you look at what percentage of the economy is the government, okay? If you go back to 1971, it was about 7% of the economy, government. So 93% was just the private sector doing its thing. Wonderful. Fast forward, we hit a high of 63% of the entire economy was the government, whether it be through tax revenues, whether it be through borrowing, you know, 63%. And then we came down, and this is as a percentage of GDP, okay? And as we came down, now we're at 43%. Okay. So what happens if, for some reason, tomorrow the government stops spending? Well, you're gonna crash. That's what's gonna happen. So again, back to the gentleman's or the lady's question. I like your analysis. I just don't understand it. So it makes sense to you. You understand why there's so much money. You understand why there's an asset bubble. You understand the savings bubble. You understand why commodity prices are rising now. You can see it. It's not rocket science, right? And to kind of finish it off, because I can't say too much, but it's different this time. It is because all throughout these years, there was always a bailout, Operation Twist, QE, excessive deficits, tax cuts. There was always something to, keep pushing those prices higher. It's not the same time. It's not the same thing this time. It's not. It's not. We're going to be raising interest rates. We're going to be tapering QE. Okay, it's not the same animal. And by the way, this is the Nasdaq 100, right? The number of stocks are above the 200-day moving average. That's what this is. So when I posted this, it was 45% of all stocks were above the 200-day. Well, what about today? It's 31%. Magic. Okay. And we're going to be raising rates soon. Keep that in mind. Don't forget that part. And you're telling me you want to pick bottoms. You want to tell me, well, do you think Bitcoin is going to hit 41,000? I don't know. How far is Nasdaq going to go down? I don't know. I have no clue. I'll know what a bottom looks like, more or less, within 20% from all-time highs. Okay. They loved the bottom. Suddenly they didn't like it. Right back down. So I hope I'm kind of answering the gentleman or the lady's question. That you just have to stick with it and watch what I do. I'll try to explain it to the best of my abilities as to what I do, but it requires effort. And guys with their hair on fire, give me the trade. Come on, give me the trade. The trade. What's the trade? Those guys, they hear like, hey, you need to know a little bit of macroeconomics. You need to know a little bit about charting. You need to know a little bit about the data points, right? And then contrast that all, have an understanding of what's really going on. And it's much more than just trading and investing. They're like, huh? I don't like that. Well, I'm going to go somewhere else. So they go, give me the trade. Come on, give me the trade. I want another one tomorrow. Give me another trade the day after. I want to be rich. Is it going to hit 41,000? I don't know. Anyway, that's it for this video. Have a great week. I'll be talking to you guys soon. All right. Thank you again, and take care. Thanks for trading view. Bye bye.